It's a fairly red day in the market, and there's no surprises why we are seeing this pullback, given the fact that when we look at the overall S&P 500 on a forward P basis, some of them are trading at some very ridiculously high valuations. Now today we just want to focus very briefly on Nvidia, which is down around 2%, as well as taking a look at AMD, which is down more than 5%, understand what is going on, are there reasons justified, and should we be adding to these two AI giants? First thing we are going to draw your attention to is Nvidia, which is down, as we said. Now the main reason, and the title does give it away, but China has effectively launched an antitrust investigation, and they have alleged that Nvidia has violated competition laws. Now specifics haven't exactly been disclosed, so we don't know the full details, but you could see this being a retaliation for the US's recent restrictions that we have seen on China's access to some of the advanced semiconductor technologies. Now the probe here also talks about the Nvidia's acquisition of Mellanox in 2020, where China effectively claimed that Nvidia did not adhere to certain commitments that they had made during the deal, and this situation continues to highlight the growing tensions in the global chip market amid the ongoing US-China trade and technology disputes. Now, as we can see, the company is down just over 2%. We're going to get into some of their metrics as well as our own valuation of where we see this company, but let's just briefly touch upon why AMD is down more than 5%. And a very silly reason. We can see here the Bank of America have downgraded Advanced Micro Devices, and they put this down to potential market share loss. Now, what have they dropped it to? Well, they do now believe this is a neutral from what was previously a buy rating, and this has just come from one analyst, as we said, Bank of America. They've reduced their target 155 from $180. Nonetheless, it still does show some growth from what the current price is of $131, but that is the main reason why we can see this company down more than 5%, and it is in fact trading towards its 52-week lows. Now let's just briefly cover Nvidia, the valuation, and then move on to a similar perspective for AMD. Down more than 2%, still up significantly triple digits over the last year, and over the last 10 years up more than 28,000%. You would have massively outperformed the S&P, probably your best performing stock if you did buy this 10 years ago today and still are holding on to it. Instead of AMD nearly 52-week low, we get Nvidia trading towards its 52-week high, a strong buy rating from Wall Street, a buy from Seeking Alpha, and even though we do get a hold from Quant at 3.49, remember 3.5 would flip them to a buy, so they're not far off. In terms of a yield, very low, 0.03%, forward P at 48, as we mentioned, very high, along with the majority in the S&P right now. However, having said that, for a company with a high forward P, they are anticipating double-digit growth to the earnings per share every single quarter over the next year. And they also have a 100% historical forecasting accuracy, 4 out of 4 beats, giving us faith that they will be able to hit their next full year estimate of 4.43, which in turn will massively lower the forward P to a more reasonable 32.15. We also just want to highlight the growth this company has, A+ pretty much right across the board, and we should be expecting this given they trade significantly higher than the sector median. Year on year, 152, a lot higher than the sector median at 4.3. Forward looking, 94, significantly higher than the sector 5.6. And one of the main things we do like to draw your attention to is the EPS over the next 3 to 5 years, estimated year on year 38% growth versus the sector median of 15.6. Now, as we said, we will talk you through both of our valuations for each one. Our Nvidia, we have an intrinsic value of $140. We've derived this from the DCF model, and as we will come to show you, we have the free cash flow year on year. Over the last 5 years, this is up on a yearly basis 135%. On the last 10 years, a little bit lower, still very high at 94%. And today we've gone for a projection of 30%. Factor in the discount rate, we get the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as you can see, $140, pretty much saying right now it is at its fair price. if you believe growth of 30% to the free cash flow over the longer term. Now remember, these numbers are subjective and you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it is for Nvidia or any others. Full transparency, we will show you though, if you believe 25% is more appropriate, $101, downside of 27%, 35%, in fact an intrinsic value of $193, indicating 39% upside. And more regular viewers know we have included this from Bloomberg, who believe the AI revolution will see growth of 42% year on year, at least for the next 10 years for this sector. So again, you can see if that was to apply, nearly $300, that is more than a double at 113%. Now typically on the channel we use the median rate, so 30%. We then use a margin of safety. Now before we do use one, we just want to highlight, given the intrinsic value today and the current price, we believe right now this company is trading at a fair value. What we do like to do before executing on companies is add a 10% margin of safety, where we use this for companies that have a wide moat, strong financial metrics, good forward-looking data. If you believe that in today's episode, will a buy around $126 does give you 10% MOS, and then we keep going just to see what the different MOSs would be like depending on your investment preference, but around 25% would be 105, but as always there's no guarantees it will get to that. So in conclusion, we see this trading around its fair value. Wall Street, on the other hand, a strong buy rating, their price target $175, and they see 26% upside over the next 12 months. Now before we jump into AMD for a similar perspective, we want to let you know this morning we've just released our latest free weekly article where we run through the one stock we are buying heavily in the month of December. Now we release one every single Monday morning where we highlight severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up, read straight away. You'll also be able to grab a copy of 28 undervalued dividend stocks for the month of December. Lots of information for each one, the upside that Wall Street themselves see over the next year. And on top of that, you can grab another recently released spreadsheet, 29 stocks that Wall Street themselves believe right now have the most upside in the S&P 500. So click below, you can sign up and start reading straight away. So as we mentioned, AMD pretty much trading towards its 52-week lows. We get a double buy rating with a hold from Quant. This one, unlike Nvidia, doesn't pay a dividend, but also equally has a very high forward P at just under 42. Up 12% over the last 12 months and has massively outperformed over the last 10 years, although a lot more volatility than Nvidia, still up strongly, more than 5,000%. When we talk about their earnings, again, very similar, double-digit growth to the EPS for the next year, and over the last 4 quarters, at a bare minimum, they have been in line or beaten. Massive growth expected into December 2025, they're in turn lowering their forward P to 27.1. We get a very similar strong growth grade where they see an A, revenue year on year around 10%, sector median at 4.3, forward looking 11.3, sector median 5.6, and we can see looking very strong 42% EPS CAGR over the next 3 to 5 years, much higher than the 15.6 that we get from the sector median. In terms of the valuation, well, our intrinsic value at $189, pretty much in line with Wall Street 188, where they see 44% over the next 12 months, indicating to us, out of the two, this one does look to be a better buy purely on the valuation perspective. And whilst we won't run through the DCF model again, you can see the numbers that we have applied, very similar to Nvidia. And when we do take a look at an MOS, we actually get quite a nice one for advanced micro devices today. In fact, you will be getting around 30% up to $132. And as we said already, some very nice upside from Wall Street in expectation of this over the next year. As always, give us your thoughts in the comments below. If you did enjoy today's episode, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Don't forget to sign up to the free weekly newsletter below, grab those spreadsheets, and come and join us in the Patreon where we do talk about our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.